So you're thinking of buying a home. Perhaps you are a first-time home buyer and perhaps you have still about a year or so before you actively go looking for homes to purchase. If you are not a cash buyer, the goal is to get your interest rate as low as possible. In this video, I will give you 5 tips on how to get a lower rate. And stick around till the end to know of the first thing to do before going out viewing homes to purchase, and we're getting after it right now. If you are new to this channel and would like to know everything about living in Lake Arrowhead, buying or selling your home in Lake Arrowhead and the surrounding San Bernardino mountain communities, then subscribe below and tap the bell for notifications so you will be the first to know about the current market in Lake Arrowhead and the surrounding San Bernardino mountain communities. My name is Alma Borcuk with the Living in Lake Arrowhead California team. We get calls and emails every day from people just like you looking to buy or sell their homes in Lake Arrowhead and the surrounding San Bernardino mountain communities. And we absolutely love it. Whether you're making your move in 9 days or 90 days, just give us a call, shoot us a text, or send us an email. We're here ready to help the buying or selling of your home in Lake Arrowhead and surrounding San Bernardino mountain communities smooth and stress-free. So here's tip number 1, maintain a strong credit score. Lenders use your credit score to assess your credit worthiness. And so a higher credit score usually results in a lower interest rate. And so your aim is to have a credit score of about 700, ideally closer to 750. And how do you maintain or improve your credit score? First, one thing is to pay your bills on time. This is one of the most significant factors that influence your credit score. So make sure you pay your bills on time, and it might help to set up automatic payments or reminders to ensure that you pay your bills on time. Also, another thing to do is reduce your credit card balances. Your aim is to keep your credit card balance low in relation to your credit limit. You should aim to be below 30% of your credit limit because a high credit use will negatively impact your credit score. And here's one tip regarding credit score that most people probably don't know about, and this is becoming an authorized user. What this means is that if you have a relative or friend that has a credit card account with high credit limit, and good history of on-time payments, then you can ask them to be added as an authorized user. This could be your parents, an aunt, or a real close friend. And so that adds the account to your credit report, and it will definitely help you improve your credit limit and your credit score and your history of payments. This is also called credit piggybacking, and the authorized user status allows you to benefit from the primary user's positive payment history. And the good thing is the account holder doesn't even have to let you use the card or even give you the account number for your credit to improve. So you should go ask your parent, a friend, or a close relative if you can piggy bank to their credit card accounts. There are a few more ways to help improve your credit score. One last thing I'd like to mention is that you can also ask the help of a credit counselor. They can advise you on more ways to improve your credit score. So those are my 4 tips on how to improve your credit score. Okay, so now tip number 2 on how to get lower mortgage interest rate, and it is save for a larger down payment. A larger down payment reduces the amount you need to borrow, which can result in a lower interest rate. Lenders often offer better rates to borrowers with higher down payments, and the added advantage of having a large down payment is that it will also lower your monthly mortgage payment. And if your down payment is at least 20%, your lender won't require you to get mortgage insurance. So that's another savings there. And when it comes time to submit an offer, a larger down payment will make you more competitive, especially when you are competing against other buyers on the same property. A large down payment can give you increased negotiating power when making an offer on a home, and sellers may be more willing to negotiate on price and other terms when they see that you are financially well prepared. Here's tip number 3 on how to get a lower mortgage interest rate. And this is to compare lenders and loan offers. You should shop around and obtain quotes from multiple lenders, compare interest rates, fees, and terms to find the overall best package that will fit your need. And one way to do this is to go online and visit sites like NerdWallet or Bankrate. And when you do this, you can quickly compare mortgage rates offered by several loan companies. And different lenders may offer varying interest rates on mortgage loans. And so by comparing lenders, you can find the one offering the most competitive interest rate, because even a small difference in interest rate can translate to a very significant savings over the life of your mortgage. And aside from checking out rates, you will find lenders who may offer special programs or incentives, especially for first-time home buyers or specific professionals like the military or health professionals. And so exploring these offerings can lead to additional benefits and cost savings. Tip number 4 is choose a shorter loan term. This means that instead of doing, say, a 30-year loan, you can choose to go with a 15-year loan term, and that usually has a lower interest rate. And the advantage of a shorter loan term is you get to pay your principal a lot quicker, and short-term loans will generally save you more money in the long run than long-term loans. But then, of course, your monthly payment will be higher. So this is only good if you are able to afford it, if you have a higher income and you can comfortably a higher monthly payment with lower interest rate with a shorter term loan. So that's one way to get a lower interest rate in buying your home. And so my last tip number 5 is you can buy mortgage points. If you plan on owning your home for a long time, buying mortgage points might be a clever way to save money. This is something you pay at closing, and in exchange for this upfront payments, paying for mortgage points, the interest rate is reduced and your monthly mortgage payments are also smaller. Each point typically costs about 1% of the loan amount and can lower your interest rate by a certain percentage. And an example is if your loan amount is $300,000, 1 point will cost you $3,000, and it will lower your interest rate by about 0.25%. That means if you're taking out a mortgage with a 6.5% interest, and you buy 1 mortgage discount point, then your interest rate will drop to 6.25%. Your savings on discount points depends on a few factors like your loan, your down payment, and your interest rate. Let's say, like in the example I mentioned earlier, let's say you're taking out a fixed rate 30-year loan for $300,000 with, say, a 3% down payment, and your interest rate is 6.5%. If you purchase 1 point, you will lower your monthly interest rate by 0.25%. So instead of 6.5%, then it becomes 6.25%. And your savings over the life of your loan will be $17,000. It is important to plan on staying in the home for a longer period of time to make sure that it is worth it buying discount points, because then you are sure that you will exceed the amount that you paid for the discount point. Like in this case, if you stay a long time on the $300,000 loan, you're saving about $14,000 because you only paid $3,000 for the point, but your savings over the time of your loan is $17,000. One of the primary advantages of buying mortgage points is that it can lead to lower monthly mortgage payments, and by paying more upfront, you reduce the interest rate, which can result in savings on your monthly mortgage bill. And if you anticipate staying in your home for many, many years, buying mortgage points can be really cost efficient. The initial upfront cost is outweighed by the overall savings on interest payments over the life of the loan. In a slower market like we have right now, it's somewhat slower than, say, a year and a half ago. You can actually have the seller pay the lender to lower your interest rate. And a popular example these days is what they call the 3-2-1 rate buy down. And how does this work? Let's say you are approved for a 7% interest rate on your mortgage. In the 3-2-1 rate buy down, in the first year, your rate will be lowered by 3%. So from 7%, your rate the first year will be 7 minus 3, it will be 4%. And then in the second year, your rate will be lowered by 2%. And so now 7% minus 2%, your interest rate in the second year will be 5%. And then finally, the third year, it will be lowered by 1%. And so your interest rate will then be 6% in the third year. And then in the fourth year is when you will be back to the original rate you were approved for. And so you will then start paying at 7%. So this approach of the 3-2-1 rate buy down is designed to make home ownership more affordable for borrowers in the early years of their mortgage. But one thing that is important to note is that while the reduced interest rates make monthly payments more manageable in the early years, as a borrower, you should be prepared for the higher payments once the buy down percent period expires. So those are my 5 tips that you can use to help get a lower mortgage interest rate. And whenever you're ready to purchase a home, feel free to call, text, or email me. I am here ready to help you find that perfect mountain home. My contact information is in the description below. And be sure to check my other videos and subscribe to my channel and tap the bell for notifications so you will be alerted when I post a new video. And I post new videos weekly. And so what's the most important first step in home buying? The most important step is to get pre-approved for a loan. And you are maybe asking why. A pre-approval helps you determine how much you can afford to borrow. And also it gives you a clear understanding of your budget for purchasing a home. And it also prevents you from wasting time looking at properties that are probably beyond your financial reach. It is really helpful to get pre-approved. And also knowing that you are pre-approved for a certain loan amount allows you to be more focused on your home search on properties that are within your budget. And this saves time and helps streamline the home buying process. And also during the pre-approval process, potential issues with your credit or financial documents may be identified. And so you will be able to address these issues in a timely manner early enough so that you can prevent delays and improve your overall financial health. Pre-approval also gives you confidence as a buyer. You can make offers with the assurance that you have a lender's support and that sellers are more likely to take your offer seriously. Sellers often prefer working with buyers who are pre-approved for a mortgage because It indicates that the buyer is serious and has the financial ability to complete the transaction. And this can also give you an edge in negotiations, and it can make your offer more appealing to the sellers. And in a competitive real estate market, when there are many buyers bidding on a specific property and the sellers have multiple offers, then being pre-approved can make your offer stand out and increase your chances of having your offer accepted. So that's my video for today. I hope you got some very useful information, and I hope to see you in my next video. And until then, bye for now.